Hey everybody, hey traders, Chris Pulver here. Happy Wild Wednesday. It is just after closing bell. It's 4:18 p.m. Eastern Time on September 11th, and what a crazy day. I can say that. So let me show you a couple things here. We had green across the board. It was it honestly looks like a pretty simple day. Like, oh, the stock market's up today, but that's not really a full picture of what actually happened. It was, to say the least, a wild and crazy price action day. So I want to show that here. So the SPY was up, 1.03% at close. The Q's up 2.17. The Dow pretty flat at 0.25. The Russell flat at 0.29. All green, obviously. But let me show what they did intraday. Okay, let's go down to a 1 hour time frame here. Even the 1 hour doesn't look that exciting, but I will show you on the 15-minute chart. Watching this thing intraday was kind of crazy. So we did have the US CPI print this morning at 8:30. It came out 2.5 as forecasted. That forecast was changed yesterday afternoon. I noted that in my Telegram channel and on Discord. It was an interesting change because we had 2.6 forecasted, then came a late afternoon revision to 2.5, and it printed 2.5 this morning. So the immediate reaction, if we go to the futures market here, the immediate reaction was a little bit of whipsaw. This is a ES feed on top and the NQ feed on the bottom. Let me zoom in. So the immediate reaction at 8:30 was a bit of a whipsaw candle, and then we end up coming back up to test those levels, dropping all the way down, and this was opening bell. Opening bell was a pretty terrible rip to the downside, and I want to show that. So I ran a live trade session this morning with my daily profit play members, and I realized that it was CPI. The market might be starting out with a little bit of volatility, and it certainly did. We saw volatility right in here, okay, right in here. And let's use a different color here. Okay, so we had some high volatility, and so I was willing to wait about 10 to 15 minutes, and I was getting into a trade right here to see if price was going to stabilize. Instead, look at this. Just this hour of straight selling, it was pretty wild. So the levels that we had put in, we talked about it all during the live session. I had a lot of traders that got out with a small loss around $100. I was willing to take the loss a little bit steeper, but I still managed to save myself a little bit of a headache on that down move. I took a loss of $3.10. Which is fine. We can claw back and do our thing tomorrow and the next day and just keep plugging away. A trade's just a trade, but what a crazy move. Because this market was down about 1.6%. Let me check that here. Let me go to the SPY. Let's go to SPX right here. Look at this. So on the day from opening bell to closing bell, we had a move 1.6% to the downside and then an absolute rocket to the upside to the tune of 2.8% from low to high. That is a lot to unpack in an intraday chart. Now, the reason I think this is an important level is because if we go to the daily chart, all we really did, this is wild because the market covered so much ground today, but all we really pulled back to is the breakout from Tuesday, this was last week on Tuesday after Labor Day, September 3rd. So going forward, are we going to have this big rip from today and then a pause tomorrow and then a pause on Friday? Or is this market like, that's it, that's all we need to see, and it just starts to continue to head higher? I'm not complaining, even though I took a small loss in the daily profit play. My portfolio is up 22K today. A lot of good things. I lowered my cost basis on Pfizer. I had a nice little income play on SPX. I also had a nice trade on ES, which is a futures trade. I put this trade on for an expiration of today at 5 p.m. So there's still about 38 minutes left in the trade. I did close it out already. You can see here it's trading for $21.90. This trade cost me $3. So this trade cost me $3 here, which I lost, and it cost me $3 here, which right now is trading for almost $22. Now I closed the trade out as we were approaching closing bell. I closed this trade out for $15. So I have a -3, and this is a net 12. Okay, which gives me a positive $9 credit. Times that by the multiplier on ES, that is $450 per contract as a net result. So all in all, I did okay on the day. I do have another trade doing the same thing for tomorrow. Let me show that right here. So I will get out of this for a moment and let me go into this trade. So this one is now done, and this one is set up for tomorrow. And you can see here the expected move in the shaded zone. If this comes into, hopefully my bullish side tomorrow, and we start pushing maybe a little bit higher, And by 2, 3, 4 in the afternoon, I can get up into this profit trap and maybe do the same thing, where I can turn a 250 debit. This is $2.50 and $2.45. If I can turn this into maybe a $15 winner, maybe a $20 winner, I might get very lucky on two really nice butterfly spreads this week. So we'll see how that shakes up. We'll see, but we're still going to go after the daily profit play tomorrow as well, and try to grab a couple bucks at the open, and we'll move on. But overall, markets did a crazy rip today from the low at support on the S&P all the way up to the Tuesday breakdown. Here we are sitting with support becoming potential resistance. We'll see if the market has what it takes to get above that level, where the bulls would probably be looking pretty good to regain control. But if we see support become resistance, then all of a sudden we see that the market might be a little toppy in here, just a near-term resistance level, and see if the bears do anything tomorrow. I mean, look, if we have crazy amounts of volatility, is it possible that the market tomorrow has another topsy-turvy day and we come all the way back down or maybe to the halfway point? I don't know. I'm not going to worry about that. I'm trying to keep my trades really simple, okay? So that's where we're at. S&P up, Qs are up, or Nasdaq up, Dow up slightly, but again, price action-wise, lots and lots of noise today. Here's the 15-minute chart on the Dow. Down at opening bell, took out the low from last Friday, ripped all the way back up like it didn't even matter, and we took out this high. Now on the Dow, on the bigger time frame, I do have the structure here. It's still just in a bunch of chop, right? It's in a bunch of chop. So we have higher lows, we have slightly higher highs. I think we're going to deal with a lot of indecision on the Dow. Same thing is true on the IWM or the Russell. We're dealing with a lot of chop here, higher lows, higher highs, but in the middle of all this is just noise. I don't mind looking at some income trades down here, looking to see if price will bounce. And so I'll probably end up playing some of those on the IWM, the RUT, and the RTY. We'll talk about those in other sessions and live trading sessions. Volatility index smashed back down with the big rip today to the bull side. Oil, let's see what happened here on oil. Oil's trading around 67. We had a little bit of a pop to the upside from 65.40 lows all the way up to 67. That should have helped some of my income plays on oil. Gold, still very choppy in this indecisive range. I'd like to see gold actually pull back a little bit just so I can buy some more. I'm still long-term bullish on gold, but we might have a rising wedge in the works, which looks something like this. This is actually going to be easier to use a straighter line. So something like this, where we have lows, we have highs, and we have a lot of indecision. Now, this rising wedge may not materialize to be a sell-off. This might go sideways, sideways, sideways. Let me draw this out. So this may go sideways, fake out, and then rip higher. And then gold has another big rally to the upside. If it does, in fact, close lower, there is an opportunity for this to be a corrective move back into trendline support, back into structural lows, but I'm still looking to see if that is a chance to buy gold on a discount and take this longer term bullish. But that's what I'm looking at for gold. Let's see if silver's hanging in there with some good price action. Silver doing fine, steady. I'm looking for gold to hopefully accumulate some more in here and then have a nice little run to the upside towards 35. Bitcoin, playing the game of lower highs and lower lows. Also looks like a lot of accumulation happening here. Bitcoin, just watching levels. 50K is a good level to dollar cost average in. $43,000 to $40,000, same thing. 30,000 would be kind of my lowest point. 33 to 30,000. So looking at dollar cost average in on Bitcoin, that's fine. Everything else was okay. It was an interesting day overnight. Look at the currency strength chart. Pretty wild day. We had strength in the yen, weakness, strength in the yen, weakness. I mean, that's all in one trading day. So not only was the index and the stock market wild and crazy, the Japanese yen was nuts. The Swiss got weaker, which certainly helps me. I'm in a big basket trade against the Swiss. We have the Aussie on top, the CAD on top, the yen back to baseline, euro and dollar neck and neck. New Zealand was a little bit softer with the pound today. But man, I love seeing that Swiss franc weakness, and hopefully there's more to come with that. But what a crazy move on the Japanese yen. Go figure, right? Here's the Nikkei. I'm actually kind of interested. If the Nikkei were to come back down to try to sniff out this low, I'm probably going to get long the Nikkei. I'll probably get long through the EWJ. It's kind of like trading the Nikkei. It actually does not take into account the bottom 15% of the Nikkei stock, so it's an inexpensive ETF to get some JPY or some Nikkei exposure. And obviously, if I wanted to take some ownership, I could. We go to the SVXY. I want to talk about that one for just a moment. SVXY. I still have some 53, 52, 50, or 53, 52, 51 puts, as well as the 35 put. I bought the shares at 40. I'm just hanging in there for right now. Everything else, Mag 7 was fine. Take a look at the yields. Let's see. bond yields were up on the day and bonds were slightly lower on the day, barely. Mortgage rates, here's the 30-year at 6.35. If the Fed starts cutting and cuts up to 1% by the end of the year, I'll be very curious to see where this is a 30-year fixed mortgage, where this finishes by the end of the year. Personally, I'm in the market for a house coming into next quarter, or I should say Q1 of 2025. I would personally love to see this down below 5.5. If I can get 5.35, 5.25, buy it down to sub 5, I'll be pretty excited to do that going into Q1 next year. But just watching everything. So all in all, for the sake of time, it was a wild day, and just looking at up 1% here, 2% for the Nasdaq. Look, the Nasdaq from bottom, this is crazy. I just want to leave you with this kind of percentage. It is nuts. It was a bit of a face melter to the upside. So initially, the Qs dropped around 1.84%, which seems like, well, that it looks tiny right now, but it's 1.84%, which is a big down day. And then of course we just pivot hard and we rip up almost 4%. So all the market needed was an excuse, and it got it. But like I said, the levels that we are at right now doesn't necessarily make me full on bull. Not yet. I would still look at something like this. The bulls have a little bit more work to do on the tech side with Nasdaq, and the bulls have a little bit more work to do on the S&P or the SPX, because we're right back to that Tuesday breakout right after Labor Day. So tomorrow's going to be a new day. I look forward to trading with everybody. If you need anything from me, let me know. Happy trading, lots of profits, and I'll see you in the markets. Thanks, everybody. Bye.